Pomp, are digital assets different from crypto, security tokens, utility tokens? And if so, what is the difference?
Yeah, look, I think that a digital asset is merely a digital representation of the four asset classes: a stock, bond, currency, or commodity. And so some of those are securities, some of those aren't. Some of those are obviously in analog form or digital form. I think what we're talking about here is the digital forms of those four asset classes that people can buy, sell, and hold, just like they can in the traditional markets.
Definitely. And Nikhil, you've referred to your investing methodology as moonshot investing. I love that term. And you've honed your skills at a bunch of places: SoftBank, Vast Ventures, and now, of course, CoVenture. Out of all the things you have invested in, why digital assets and why now?
I think digital assets are probably the biggest moonshot out there. I think it's important to understand what a moonshot really is. It's not something that has a very low probability of success. It's actually more defined by what the relative potential is of that investment opportunity. So when I think of moonshots, I think of big sectors, not small nascent sectors. I think of areas where they're really overlooked, not areas that people haven't heard of yet. And crypto is sort of at that exact moment right now. It's a couple hundred, maybe between 200 and 300 billion dollars at any given time. That's really small relative to large financial markets, but it's not really small when you think of all the developers and all the people that are actively working on and towards it. And so what's happening is there's a few subsectors that really can identify and characterize what a moonshot investment opportunity really is. So if I think of every single company that's out there in the crypto world, there's really only two ideas that have done really, really well. The first is crypto trading. And you see that from the exchanges. You know, Binance did over $1 billion, and it's barely over a year old. Coinbase, most people in America among the under 50 crowd have actually heard of Coinbase, which is an extraordinary accomplishment for any startup that's just a handful of years old. And that's another crypto exchange that's very popular. The only other business model that we've seen is crypto infrastructure, like when people are selling chips to do mining and things like that. Bitmain has an IPO that's coming up that's hit the tops of all the newspapers recently. So these are kind of the two subsectors that have made a ton of money. And if you think about, well, what's the moonshot there? It's actually like the picks and shovels businesses, similar to the gold rush that we had 100 and some odd years ago. And I think of 5 or 6 different theses there where I haven't seen the companies yet get to 5, 10, 15, 100 million bucks of revenue. But I think it's going to happen over the next year or two. So I think right now is sort of the perfect opportunity to get into those picks and shovels types infrastructure businesses for crypto.
Don't get scared because the market is changing constantly.
It is, for sure.
So, as investors and experts who've been in this space from early on, what should investors know about the companies in this space and the potential for investment? And you touched on that a bit, but can you share more?
Sure. So early stage venture capital investments take 3 different varieties. You're either an investor in the people, in the market, or the business model. Right? If you don't know which one you are, then you're probably not going to be a great investor. So it's okay to have multiple investment theses. I personally think that crypto infrastructure and trading infrastructure is the ideal place right now, but that could change in 2 years' time, or maybe even sooner. Most of the companies out there are nascent businesses. So they're not quite two guys and a dog in a basement in Silicon Valley, but they are a handful of engineers that are working on a new problem that don't have a lot of traction yet. So in those cases, you really have to make a bet on the team. And the team, it means they have experience maybe early in crypto, but not necessarily. From a crypto trading infrastructure, they may actually be coming from Wall Street. And we're seeing companies like Bakkt, for example, and companies where folks have spent a decade or two at Goldman Sachs building out trading desks that are now coming out and building something similar for the cryptocurrency sector. So there's a lot of hype around fraud and these kinds of concerns, and for sure, absolutely, people should be wary of those types of things. But I think what we're seeing is there are tens of thousands of engineers out there right now working on hard problems, and among that crew, there's a plethora of decent investment opportunities that are met with founders with extraordinary talent.
Yeah, definitely. Pomp, do you want to add anything to that?
Yeah, look, I think that there's this Howard Marks quote that we use all the time, where he says, in order to be in the top 5% of all annual returns, you have to take so much risk that when you're wrong, you end up in the bottom 5% of all returns. And so, if you don't want to ever be in the bottom 5% of returns, you should never take enough risk to be in the top 5% of returns. And so, I think we saw that play out in the kind of liquid crypto, active management market, where last year there was funds that were up 700, 800, 1200% annually. And then this year they're down 60, 70, 80%. And so they're just going through this cyclical kind of highs and lows. I think when you look at the infrastructure investing, what ends up happening is you actually don't care which individual liquid crypto goes up or down in value. What you're doing is you're betting on the overall market increasing in size. And so as more people join the market and kind of more participants enter, you end up accruing value because, again, it's the infrastructure, the foundation that the industry is built on. And so you can weather the downturns, and then you're obviously benefiting on the upside, and we think it's just a better risk-adjusted investment strategy.
So I want to piggyback on that for a quick second. I think it's important to think back to, what liquid emerging financial asset classes were like in history. And typically, the best investors in those were fundamental investors, right? Value investors. They see a price discrepancy, and they get in early, and then as the price adjusts, they get to benefit from it appreciating disproportionately, right? And that worked really well in asset classes where there wasn't a lot of data. But crypto and blockchain are different. There's an extraordinary amount of data that we have access to. And the interesting thing is that as these new services come out, it actually increases the amount of data significantly. A real-world example is a year ago, we didn't even have futures markets. Right? And then last December, the entire futures market opened up. Now that was a great business model for CBOE and others that have created them, and a handful of other startups that have begun to create a Bitcoin futures market. Now you're going to see additional areas where there are companies that are startups that are investment opportunities creating more data, and as a result of those data, it creates an opportunity for, I think, quantitative investors to come in and say, you know what, we can see lots of price discrepancies and analyze those in a quantitative manner, thereby avoiding some of the large drawdowns that Pomp is really talking about. So if you notice, I kind of painted a picture where there's two investment opportunities. One is early stage crypto trading infrastructure investments that create new data for the market, which then in turn allow for a whole new breed of quantitative investors that are just playing in the cryptocurrency sector. I think this is two great strategies that I know we're definitely taking advantage of.
That's awesome. Well, thank you so much for that overview of digital assets and for your insights. We appreciate it.